everyone, my name is Afreen Asmat and I welcome you all to today's session. So today is a part 2 of unit 5. Topic name is operational aspects of deposit account. Part 1 already completed. We are discussing part 2 and by this chapter will be finished. So let's start discussing the overview, the overall part second. First of all, if we talk about the interest on the deposit of different type of account, we have already discussed interest on the saving account. That I have already told you that bank are free to charge differential interest rate, okay, if the deposit exceeds 1 lakh, and for the initial stages bank has to charge uniform interest rate. This I have already told you in the last class. Let's talk about the additional interest rate on the domestic deposit. So if we talk about the additional interest rate, so there are additional interest rate for staff, management and senior citizen. Staff, the additional interest rate is 1% per annum, whereas senior citizen, they can vary from 0.25% to 0.5%. Okay, now if we talk about the interest on account that is frozen by the bank, so the bank continue to credit the interest on the account which has been frozen by the bank. So interest credited should be done by the bank regularly, irrespective of the transactions they are having. So renewal with the interest for frozen term deposit on depositor's request, renewal for maturity within 14 days from the request date if after. Unclaimed interest release with term deposit, bank may renew in the absence of request, informing authority and depositor. Interest on frozen saving account should be credited regularly. So first of all, if we talk about the frozen term deposit, interest should be renewed by the bank, and renewal from the maturity is done within 14 days from the request it after. Okay, and if there is a saving account, then the interest, if there is a saving account which has been frozen by the bank, so the interest should be credited regularly by the bank. Okay, next, if we talk about the DEF is the Depositor Educational and Awareness Fund. DEF is Depositor Awareness and Education Fund. First of all, when account is dormant for a very long time, when any account is dormant, it means that there is no activity, either debit or credit in that account for a very long period of time, then the amount of that account is actually transferred to DEF, okay, which is actually the regular regulation of the bank has to do it regularly, but the person who has the account can reclaim back their deposit again from the DEF. But if the account is dormant for a very long period of time, say after 10 years, so if there is no activity in that account for a very long period of 10 years, now the amount, for the safety and security of that amount has been transferred to DEF. But the obviously the person who have that account, or the legal heir, or anyone who is in charge of that account, can claim back their deposit from the DEF account. Okay, now DEF has been introduced by RBI, Reserve Bank of India, in 2014, and it is for the it is under the Banking Regulation Act. Bank transfer whatever the dormant deposit is after 10 years to DEF. The fund is utilized for the promotion of depositors' interest as specified from the IRBI for time to time. The fund which is in the DEF account, which is actually contributed by the members of the DEF, and the member of DEFs are bank and financial institution. So whatever the fund in the DEF is, this has been used for the awareness and the education of promotion, as well as for the promotion of the depositor. Now, whoever the depositor is, they are entitled to claim from the bank his or her deposit if it is transferred to the fund. So if the dormant, if there is any amount which is transferred to the DEF amount, it is nothing to worry, because you can always reclaim that amount back from your bank or financial institution. Okay, now next, if we want to talk about the bank will pay the amount to the depositor and claim refund of such amount from the fund. So if there is a request, for example, I have an account in which there is no activity for the last 10 years. Now my amount has been transferred to def account. I have seen that, okay, my account has been transferred, my deposit has been transferred to DEF. Now I can reclaim back my amount. If I have requested the bank to reclaim my fund, then the bank should process my reclaim request and should ask the DEF to refund first of all to the bank, and the bank will refund this amount to the depositor. Next, the rate of interest payable by the bank to the depositor and claimant of the amount transferred to fund, that is 3% simple interest. So there is a rate of interest also which is payable by the bank on any of the fund or amount which is actually being transferred to the DEF, and that amount, that interest rate is 3% per annum. Okay. Next, bank shall be entitled to claim refund of the eligible amount from the fund in Indian rupees only. There is a provision that if any amount is transferred to DEF amount, bank can reclaim back that amount only in Indian rupees. The depositor can claim the amount either in Indian rupee or foreign rupee equivalent of the rate. So if bank has to reclaim back from the DEF account, and that should be in Indian rupees only. But the from bank, if the customer or the depositor want it in the foreign rupees, they can do as well. They can transfer it in the Indian rupees as well. Foreign rupees, whichever is the equivalent value of their amount, should be transferred to them. So this is known as the DEF account. Introduced by RBI 2014, dormant deposit after 10 years transferred to DEF. It is used for the promotion and the interest of the depositor. You can always reclaim back your amount from the DEF account. If you are reclaiming or if you are wanting that amount back, the bank should give you that amount. Bank can withdraw from the DEF only in Indian rupees, whereas the depositor can claim it back in Indian as well as foreign rupees. There is a interest rate that is given payable by the bank on the amount that is transferred to DEF, that is 3% per annum on a simple interest. Clear? Done? Very easy. Now next, what is a garnishee order? It is very important. See, garnishee order is an order which is actually passed by the court in favor of the judgment creditor to attach or give back the amount to the judgment creditor if there is a debtor, if there is any amount left on the debtor. And this order is applicable when the relationship between the bank and the customer is of debtor and creditor. Means garnishee order is always passed when the relationship between the bank and the customer is debtor and creditor. Means in this case, always remember that bank act as a debtor and customer act as a creditor. For example, there is a some amount which the customer has deposited it in their saving account. For example, there is a 5 lakh amount which the customer has in their saving account. Bank, for example, lent all the amount in the market as a loan. Now this creditor, means this customer want back their amount. Now the bank is actually not crediting that amount. Bank is actually not giving that amount. So this customer can go to the court and the court issue garnishee order requesting or ordering, not requesting, ordering the bank. Okay. So the garnishee order is actually issued in favor of the judgment creditor. Creditor is customer. In favor of the creditor means customer, and it is ordering the bank to claim or to deposit back the amount which is actually due on the bank side. This is known as the garnishee order. Okay. So garnishee order is it issued by the court, okay, that is obtained by the judgment creditor, attaching the fund belonging to the judgment debtor in the hand of later step. Means if the bank is a debtor and customer is a creditor and customer has deposited their money to bank, now bank is not giving back this money to the customer. Now in this case, customer can ask for a garnishee order. Court issue garnishee order in favor of the judgment creditor, ordering this bank, the debtor, to hand over all the amount which is due on him or her from the creditor side. This is known as the garnishee order. The service of the garnishee order, NISI, is the preliminary proceeding of the bank. The first thing that the court gives in a customer or in the steps of the garnishee order is the garnishee NISI or the order NISI. So the first step is the order nisi. This is followed by the absolute proceedings, and then there is the garnishee absolute which is given. Okay, so first the bank is actually asking for the reasons why there is a delay from the bank side to give back the customer money. So this is all in the order nisi. First of all, there is a order nisi that is passed by the court to the bank, and after that there is a absolute, there is a garnishee absolute which is actually ordered by the court in favor of the judgment creditor. The order applies only in the balance sheet of the amount of the customer at the time of the receipt of the order. This is only for those value which is actually at the account of the customer at the date of the or passing of the order. For example, today my account balance stand for 10 lakh rupees as per my convenience, but bank is not giving it back to me. Now the judgment creditor, the garnishee order has been passed and the balance is rupees 10 lakh. Now this garnishee order is applicable only to this 10 lakh rupees, means bank has to give back this 10 lakh rupees immediately to me. This is known as the garnishee order. Okay, so simple, the relation should be of the debtor and creditor. Debtor should be bank and creditor should be customer. Second, it is passed in favor of the judgment creditor, means customer, to and ordering the judgment debtor to repay back all the amount which is due on their side to the creditor. The first step is passing of the order nisi, then it is followed by the absolute garnishee. Okay, last, if we talk about the order, this order applies only on the balance of as on the date on which the order has been passed. This is known as the garnishee order. Now there is an attachment order also. Now there is a difference between garnishee and attachment order. Let us discuss some of the difference. First of all, if we talk about the garnishee order, it is actually issued by the court of law, whereas the attachment order is issued by revenue authorities like income tax departments or anything. It is applies to the balance at the time of receipt of the order. Future date is not covered, means whatever amount is today in my account, the order is actually for that amount. Okay, future balance and future date is not covered, whereas it is attachment order is applicable to the complete profile of the customer, to present as well as the future. It is actually passed on when the bank has to credit all the amount uh, from today and in the future also in the customer account. Applicable only when the relationship is of debtor and creditor between the bank and the customer, and it is applicable between the bank and the customer, that the relationship is of debtor and creditor whether at the time of receipt or at the future date. So the relationship is both the same. The bank is acting as a debtor and the customer is acting as a creditor in both the cases. The difference is it is only applicable when the current position is debtor and creditor. Okay, current relationship matters. Here, the relationship, the complete order is for the future date also. Okay, now when it is issued in the single name, it is not applicable in the joint name. And if it is issued in the single name, it is applied on a pro rata basis to the joint account only. Means if there is any attachment order which is passed on to the judgment creditor in favor of the judgment creditor, then bank has to deposit the money in the account of judgment creditor. Now it will be applied in a pro rata basis if there is any joint account. Okay, if it is passed in a single name also, it is applicable in a joint name if that person is in the joint account relationship with another basis. So the amount has been credited to that person account in a pro rata basis to the person whom they have in the joint account also. Okay, whereas this garnishee order, it is only applicable to that person to which, to whom name the amount, the order has been issued. They both have same thing. They both are the order which are passed in favor of the judgment creditor, that the bank should have to return back the money which is due on their side of the customer. Okay, the simple thing is it is passed by the court, whereas it is passed by the income tax authority. Now, it is applied only in the present value, means whatever the, if the date is passed or the order is passed today, then it is applies to only that value. Okay, but this is applied to present as well as the future date. Okay, now if we talk about it, is if it is passed in a single name, it is applicable only to that name and it is not applicable in the joint account. Whereas if it is passed in the single name attachment order, it is applied on a pro rata basis on the joint account also. So these are the some of the difference between garnishee order and attachment order. Okay, the main difference is it. Okay, this is the five main difference. Okay, rest you can read, it is very simple. So five main difference I have explained. Okay, now lastly, what are the operational instruction in the joint account? So there are different type of operational instruction in the joint account. Let us discuss some of the operational uh, action in the joint account. First of all, if the joint account carry with themselves the clause of jointly without survivorship clause, it means what? It means the account is operated jointly by all account holder. The first thing is that it is jointly operated by all the account holder. No one can operate this account separately. So it is actually operated by jointly all the account holder. Second, as there is no survivorship clause, so if there is a death of any one of the account holder, then her rights is actually transferred to the legal heir. For example, there is A and B in the joint account, and if it is with the clause jointly with survivorship clause, if A dies, then obviously whatever the right, whatever the balance of the A has is transferred to their legal heir. Hence the operation in the account should be stopped. First of all the operation should be stopped and the balance is payable to the survivor and the legal heir. So here you cannot continue that joint account with the legal heir and the left out partner. No. So there is A has a legal heir C and there is a B. Now A died. The amount is transferred to C, but the account cannot be operated by B and C. No, the account should be stopped and the fund is transferred first of all to the legal heir and second to the rest partner. Okay, and this account is actually closed. This is known as jointly without survivorship clause. Now there is a jointly or survivorship clause. It means what? First of all, the account is operated by all the joint account holder. Now the mandate says that if there is a death of the holder, the surviving holder has the right over the account. Now it says that if A dies, if A dies, now B as has the hold in the whole account. Hence, the survivor can be allowed to continue the account and balance in the account can be paid the survivor. So, for example, there is A, B, there is A, there is B. Now, if A died, this in this case, jointly or survivor, the account, whole account is being transferred to B. B is the survivor, so B can operate the account and the balance is actually transferred to B. In this case, there is A, there is B. A has a legal heir C. If A dies, the account has been closed. The amount is transferred to legal heir. Now, this account is actually closed and cannot be operated further. This is known as jointly and this is known as jointly or survivorship. Okay, next, if we talk about the next is either or survivor. Now, what is either or survivor? This, in this, if there in the case of death, in the event of death of any one of them, the survivor can be allowed to operate the account or the balance in the account can be paid to the survivor. The account can be operated by either of them. First of all, there is no compulsion that the account should be jointly operated by both of them. The account can be operated by either of them. It is either or survivor. So the account can be operated by either of them. It means that in the case of death, the survivor, it is allowed, they are allowed to operate the account and the balance are paid to the survivor. All the balance can be paid to the survivor. Okay. Now, anyone or survivor, anyone or survivor, it means that this account is opened by more than 2%. First of all, this account is actually opened by more than 2% and is operated by any one of them. First condition is more than 2% has the open this account, and it can be operated by either of them or by one of them. If there is death of that one holder which is actually operating the account, the right to operate the account rest with the survivors but jointly. Now, for example, there are A, B, and C, 3%. Now, this account is opened by more than 2%. First of all, for example, there are 3% who have opened this account, anyone or survivor. Now, the account is operated by only one of them. For example, A is operating the account. Okay, B and C cannot operate this account. Okay, now if A dies, then then the condition to operate the account is actually transferred to B and C jointly. Now they have to operate the account jointly. Now, on the death of all except one of the account holders, the balance in the account is payable to the lone survivor. Now, if there is a death of two partners and there is only one survivor, now the balance is actually paid to that one single survivor. It is known as anyone or survivor. Lastly, there is first name or survivor. Now, what is first name or survivor? First of all, this account is opened by again more than 2%. Now, such account can be operated by the first holder during her lifetime. So, if there are A, B, C, and D, and D is the first holder of this account, it means that this account is operated by D in their whole lifetime. Now, if D dies, the survivor can jointly operate the account. Now, they all together operate the account. Now, on the death of all except one of the holder, the balance is payable to the lone survivor. Same. This is known as first name or the survivor. So, first name is you have to elect any one person as the first name and the account is operated by first name. So, this is used for an account open in the name of more than 2%. Such account can be operated by the first holder during her lifetime. If the death of first holder occurs, the survivor can jointly operate the account. Clear? So this is the operational aspects of the joint account. First, there is jointly or survivorship clause. It means that first of all, account is operated jointly by all survivor. Second, if the because there is no survivorship clause, if the death of one occur, then obviously the account is transferred. The amount balance is transferred to the legal heir, and now the account is closed and the amount is transferred to them, okay, respectively. If there is jointly or survival, it means that first of all the account is operated jointly by all the account holder. If there is a death of any one partner, then obviously the right to operate the account is transferred to the another holder and the amount is also transferred to another survivor. Same in either and survivor. This is the account which is actually open in the name of the 2%. This account can operated by either of the 2%. Means they can both operate the account individually, either of the 2%. Now, if the death occur, the amount is transferred to the lone survivor and the lone survivor can operate the account individually. Anyone or survivor, it is the amount, yeah, it is the condition in which more than 2% are opening the joint account. For example, there are 3%. Now, there is only 1% which is actually operating the account. If that 1% dies, then other two can jointly operate the account. For example, if B died, then A and C jointly operate the account. If C died, then A and B jointly operate the account. Clear? So this is the complete thing. So this is the whole chapter. I hope that you have all understood this chapter completely. Okay. So if you like this session, just please like and share the video and please keep on giving the feedback. Thank you so much, guys. Till then, take care. Bye bye, everyone. Take care, guys. Bye.